Here are today's top 6 crypto stories. Bitcoin hit the same wall 3 times in 3 days, and neither side of the biggest standoff in the market has blinked. 1. On Tuesday, Bitcoin ran to $81,200, its highest price in over 3 months, and the 50-week moving average rejected it. Monday's push stalled at 80,600. Wednesday's try died just above 80.5. 3 days, 3 attempts, 1 wall. By Wednesday evening, the price sat near 78,500, and the market got to find out who folds first. Nobody did. The short side held. The 3 institutional books betting against this rally, Abraxas Capital, Wintermute, and Fasanara, were still open at the latest on-chain read. This is the $1.4 billion bet we have tracked all week, and 600 million of it sits on hyperliquid in public view, entered against Bitcoin from as low as 65,000. The deepest book is roughly $58 million underwater. They can afford the pain. Their liquidation levels sit more than 60% away. They do not get squeezed out. They bleed slowly on purpose. The long side held too. The ETF bid bought straight through the pullback, and Wednesday afternoon the backdrop swung risk on. The Fed's preferred inflation gauge held at 3.3%, soft enough to keep rate cuts in play, and Nvidia answered after the bell with a $96 billion quarter. Into Thursday morning, Bitcoin held near 79,000. 3 rejections, 0 capitulations. That resolves loudly, one way or the other. And the scheduled information both sides are waiting on lands Friday, when the Fed's new chair gives his first Jackson Hole speech. 2. The machine on the long side of the standoff. Spot Bitcoin ETFs took in $314 million on Tuesday, their 7th straight day of net inflows. August is past $3 billion, on track for the strongest month since last October, and total assets reached $99 billion. That leaves the funds one ordinary week short of $100 billion for the first time ever. The streak has already erased more than half of this year's outflows. The wall keeps getting bought. 3. Look closer at the bet against all of this. On Hyperliquid, the 3 firms are short about 138,000 Ether and 3,400 Bitcoin, roughly $600 million of exposure. The Bitcoin entries run from 65,000 up to 77.5. Wintermute sits roughly flat. Fasanara is down around 16.5 million. Abraxas carries the deepest losses of the 3. These are hedge desks, not gamblers. Every day the wall holds, they pay for the privilege of being early or being wrong. 4. Ether is the month's quiet winner. It traded near 2,450 on Wednesday, up more than 30% in a month, ahead of Bitcoin's 22. Ether funds are running their own 7-day streak, about $1 billion of inflows, 180 million of it on Tuesday alone. The rotation nobody titles videos about is the one outperforming. The next fight is at 2,505. Sentiment blinked even though positioning did not. The fear and greed index gave back about a dozen points in a single day, from the high 70s into the mid 60s, while Bitcoin slipped only 3%. 10 days ago, the same gauge sat in fear at 62,000. Greed left before price did, and historically, that order is the healthier one. Euphoria dying early is how consolidations hold. 6. Whoever wins the standoff, one balance sheet already won. Hyperliquid, the venue hosting the entire $600 million short book, watched its own token print an all-time high above $83 on Sunday, and it is holding near records while the drama runs. Every day, the hedge desks and the dip buyers keep fighting. The exchange collects the fees from both. Selling shovels in a gold rush is the oldest trade in finance. This version runs on chain, in public, in real time. An $81,000 wall, a $99 billion ETF book, and the Fed's new chair speaks Friday. That is crypto today. Here is today's question for you. When neither side of a standoff this size will fold at the same price, what actually breaks the tie? New money or new information? Friday brings the information. Tell me which one you are betting on in the comments. I read them, and the best answer usually comes from one of you. Blue pill. Consolidation above 77,000, leverage at record lows, and a relentless ETF bid. That is a spring compressing, and the release is coming. Red pill. 3 rejections at the 50-week average is how tops get built. Greed cooled first, and the desks holding the shorts are paid to stay patient longer than retail can stay excited. 58 million in losses has not made them close. Ask yourself why. The timeline keeps moving. We will see you in the next one.